project we have chosen to carry out is starting a business directed to green energy in the Netherlands. Our company sells solar panels as well as air generators for external customers and companies. The Dutch economy is seen as an opportunity because of its stable system as well as its high living standards, which leaves space for innovation and projects that will help reduce the negative impact on the environment. The Netherlands has specific climate goals, such as reducing CO2 emissions. As solar and eolic energy are both renewable and clean forms of energy, the emissions will be reduced the more it is applied in the country. Moreover, we see a market opportunity as the Netherlands has grown a huge dependence on imports of energy. In 2017, this dependency was 51.8%, which leaves a lot of space for innovation and on this specific area.
To analyze the macroeconomic environment in which the business will take place, a quantitative research was conducted, analyzing the country's socioeconomic profile, including the business sector, business cycle positioning, fiscal indicators, among other things. This approach was considered the most appropriate one as quantitative economics relies on hard facts and figures to study variables using a statistical analysis and historical data patterns. Data was selectively gathered, compared, and interpreted without intervention from official economic institutions such as the International Monetary Fund, the World Bank, and the European Commission, among many others. The Netherlands has a total area of 41,540 square kilometers, and its major natural resources include a variety of minerals and energy deposits. Moreover, the country population is 17,344,874 people. It has an annual growth rate of 0.7%, being one of the most densely populated countries in the world. In another sense, public spending in education and student loans as part of the GDP is around 5%, amounting to almost 40 billion euros. The population is highly educated and skilled, having a mandatory education through age 16, and the literacy rate is almost 100%, showing above proficiency in literacy, numeracy, and problem solving.
Before making an investment decision, it is key that we look at the macroeconomic indicators for the country. First, in the Netherlands, we will look at the GDP. For the year 2019, the GDP was 907.1 billion current US dollars, which is quite large for a country this size. The GDP growth, as with most developed nations, was only 1.7%. This GDP growth is very small, but as what happens with many developed nations, it is slow but steady. Moving on, we have the GDP per capita in PPP terms. This might tell us how much a single person earns in the country in a year. The GDP per capita in PPP terms for the Netherlands was 61,245 current international dollars, which is way above the world average. A big part of knowing a country's macroeconomic data and its GDP is to know how the GDP is divided, especially by its demand components. First of all, we shall see the total consumption, which is divided by private consumption and public consumption. For the year 2019, private consumption was 307.1 billion US dollars, while public consumption was 223.3 billion US dollars, giving a total consumption of 619.4 billion US dollars. Then we shall also look at the gross capital formation in the country. For the year 2019 in the Netherlands, the gross capital formation was 193 billion US dollars. And finally, and as we will see later, we need to look at exports and imports. Exports in international US dollars was $755.8 billion, while as for imports, it was $661.2 billion. By doing simple math, we can already see that Netherlands has a trade surplus. Another important aspect of the GDP is calculating it by sectors. The first sector is agriculture, forestry, and fishing, which comprises only 1.65% of the GDP, while the next sector, manufacturing, composes a bigger part, 10.92% of the GDP. Nevertheless, the biggest sector of the country's economy for the GDP would be the services sector, which comprises 69.72% of the GDP. Now we reach an important part of every country's economy, which also happens to be the most important part for our project and our industry, the energy industry. In the Netherlands, we can divide this by two, energy generation and energy consumption. For energy generation in the Netherlands is mainly made up of natural gas, which is 83%, followed by renewable energies, which is 9%, followed by oil, 4%, and nuclear energy, 2%. Nevertheless, energy consumption in the Netherlands is mainly made up of natural gas, 39%, oil, also 39%, coal, 14%, and renewable energies, 5%. These, as you can see, vary from generation to consumption. Therefore, we can infer that the ongoing dependency on resources like natural gas and coal make renewable energies in the Netherlands a great industry, especially since the Netherlands government tends to subsidize these types of energies in order to meet the European criteria for renewable energies. Now we reach another very important part of a country's key macroeconomic indicators, these regarding employment. The GDP per employee was calculated to be 108,790.6 constant PPP dollars for the Netherlands in the year 2019. The unemployment rate, on the other hand, was calculated to be 3.38%, which, in comparison to worldwide numbers, is very low. On the other hand, the employment rate for the Netherlands was calculated to be at 61.24% for people over the age of 15. And finally, the average wage calculated by the Central Plan Bureau was calculated to be 36,500 euros in domestic currency. Finally, one of the key macroeconomic indicators we shall see is prices and inflation. Prices and inflation in the Netherlands are quite stable, and they do not tend to vary much from year to year. For the Consumer Price Index, we find that the CPI growth in the Netherlands for the year 2019 was 2.63% only, according to data provided by Fred. Moreover, the GDP deflator growth was calculated to be only 3%, according to data provided by the World Bank. Now that we saw the key macroeconomic indicators for the Netherlands and the GDP, we must focus on the external sector, which is mainly composed by the trade balance and payments. First, we can see the exports. For the year 2019, the Netherlands exported 457.1 billion euros worth of goods, which is 84.32% of their GDP. When we focus on imports, we can see that the Netherlands imported 411.6 billion euros worth of goods, which is 73.33% of their GDP. Now we can see that their trade balance is of 44.5 billion euros, which is also 4.86% of their GDP. We can see year by year, and specifically in the year 2019, that the trade growth for the Netherlands was 5.21%. Now, if we focus on the current account balance, we can see that the current account balance for the Netherlands is composed of 9.95% of the country's GDP, and this current account balance has a value of 74.17 billion euros. Finally, part of the external sector is looking at the country's exchange rate and its competitiveness. As many of you know, the Netherlands is part of the European Union and the Eurozone, which means that their currency is the euro. As you may know, the euro is one of the most secure and stable currencies in the world. It is the second most traded currency after the US dollar. As we can see by information provided by Morningstar, in today's date, 1 euro equals 1.22 US dollars. And as we can see, this currency is very stable and strong compared to other international currencies.
Now, let's discuss the macroeconomic policies of the country. The Netherlands financial system, which deserves almost 8 times its GDP, has a massive and internationally integrated financial structure. The Dutch banking system offers no immediate threats to financial stability. However, the banking system still has vulnerabilities. Financial institutions in the Netherlands met regulatory criteria and their profitability increased as a result of economic growth throughout the year 2018 and 2019. Regarding the indebtedness of the households, it mainly consists of mortgage debt, and the nominal debt is constantly increasing. As a percentage of GDP, household debt is about 50 percentage points higher than the Euro region average, owing it to tax subsidies that allow households to take on mortgage debt. Although most households have considerable housing and pension savings, these assets are also illiquid, making them vulnerable to shocks. This is something really important to take into consideration for our business proposal. Another important factor to take into account when deciding to invest or not in a specific country is the foreign direct investment, the FDI, which indicates the level of investments done from another country or outside the country. The Netherlands, for instance, is one of the largest recipients of FDI in the world. In 2019, the inward flow of FDI was 84,216 million US dollars. This presents a disadvantage to our business because there are many investments happening in the Netherlands. However, the field of sustainable energy is a need for the Dutch society, as the government has started a process to develop a strategy that will reduce greenhouse gas emissions by 49% in 2030 relative to 1919 levels. Now, onto monetary policy. The monetary aggregates in the year 2019 for the Netherlands for M1 were between 459 billion and 492 billion, as seen in this graph. On the other hand, the less liquid deposits, such as mutual funds, which is M2, were between 966 billion and 987 billion, as shown on this graph. The money supply is important in order to determine the level of prices as well as the possibility of inflation in the long run. The Netherlands offers great numbers and shows no weaknesses in this specific area. Moreover, when discussing the monetary policy of a country, it is relevant to assess the interest rates. The Netherlands in 2019 faced an official interest rate of 1.53 for the new businesses, which is beneficial when considering a loan as it is not that high. Furthermore, the taxation system in the Netherlands is important when considering to open a business in the country. The income tax rate in the Netherlands is calculated as a percentage of the financial interest of a company, the incomes and the savings as well as investing. This percentage is adapted depending on your income, as seen in this table.
Regarding the business cycle positioning, according to the IMF, growth was projected to decline 1.6% in 2019 and 2020, reflecting moderation in both domestic and external demand. This is stipulating an output gap of 1.2 as a percent of potential output as of the years mentioned. Given the widening headline and favorable debt trajectory, the established expansionary fiscal posture remains appropriate for the current conditions. Nevertheless, this strong fiscal position could be further applied to boost potential output and improve long-run growth. Now it is time to talk about the institutional framework. Regarding political stability, according to the economist's 5 categories of democracy, the Netherlands has an overall score of 8.96, ranking as number 9 globally and being a full democratic country. Its political stability is characterized by free and transparent electoral procedures and the protection of civil rights throughout the country. When talking about the labor market, it has been performing well the last couple of years, continuously increasing and now exceeding the pre-crisis level. This places the Netherlands labor market as one of the highest in the European Union, with 82.2% in the first quarter of 2019. Nevertheless, labor shortages are starting to emerge, but wage growth remains moderate. This implies that it has become less responsive to changes in unemployment. We need to take into consideration that the Netherlands promotes rules and standards for businesses, trade unions, and governments to develop effective institutions and principles for sustainable production. Moreover, its policies reinforce competition, efficient production, transparency, and innovative entrepreneurship. Regarding its competition policy, it has strengthened it given the increasing interconnection of national economies, highlighting the importance of promoting and protecting competition. The Netherlands benefits from an investment-friendly institutional and political setting, having few regulatory barriers to invest. According to the World Economic Forum, it qualifies as an innovation leader, having an attractive research system and a highly innovative environment. The government has announced the establishment of new investment institutions along with policies to boost investment, providing risk capital such as guarantees, subordinated loans, and equity. Another aspect to consider is Netherlands' competitiveness. According to the Global Competitiveness Report from the World Economic Forum, the Netherlands is ranked 4th globally and it is one of the most competitive countries in Europe, being characterized by its macroeconomic stability, health and infrastructure quality, having a well-developed innovation ecosystem, highly skilled workforce, vibrant business dynamism, and advanced innovation capability. Moreover, it's especially strong on openness, welcoming entrepreneurs, disruptive ideas, having an easy process to set up new businesses.
After analyzing the country's key macroeconomic indicators, we can conclude that the Netherlands is a well-developed country. Its main strengths are characterized by its high GDP per capita, low and stable inflation, high average salary per employee, and a trade surplus. These indicators, in a combination with many of the other macroeconomic data research, lead us to state that the Netherlands is a country where investment is very much possible.
Regarding the macroeconomic policies, the Netherlands offers a stable financial system. The indebtedness of the households is not high. However, pensions and housing savings that are illiquid makes them vulnerable to shocks, which is something important to take into consideration for a future investment. The Netherlands is one of the highest countries receiving foreign direct investment, which is a double-edged sword, as many foreign investors have it on target, making it a highly concentrating market. On the other hand, the Dutch low long-term interest rate encourages new investments.
As aforementioned, the country has been considered as an innovative nation filled with entrepreneurship throughout its business activities. It has an investment-friendly institutional and political setting with few barriers to invest, providing guarantees, loans, and equity. Lastly, it is considered one of the most competitive countries in Europe and globally, having macroeconomic stability, a well-structured innovation system, a highly skilled workforce, and most importantly, a strong openness and welcoming environment for entrepreneurs.
In conclusion, we strongly believe that an investment in the green energy sector in the Netherlands would be very beneficial. After studying all the macroeconomic, demographic, social, and political data, we can conclude that the Netherlands is a country with great investment opportunities, especially in the green energy sector, where the country aims to increase its renewable energy presence.